Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
That's right. Saturday morning, it means it's time for Florida Talk Real Estate. 2 hours of infotainment, and it's great to have you with us, whether you're on the old terrestrial radio, 92.1 or 101.7. Thank you for tuning in on a Saturday. Maybe you're somewhere else around the country or the world with your free download, your iHeartRadio app. We appreciate you finding your way in on a Saturday morning. And, of course, we live stream Facebook. You can find us on Florida Talk Real Estate's Facebook page and on YouTube as well. That's Florida Talk Real Estate LLC on YouTube. 2 hours of infotainment is what we offer you, and thanks for consuming it on a Saturday. You can be a part of the show with your questions, comments, concerns in the world of real estate. Jump into what's going on at 877-927-6969. Our producer extraordinaire, Jimothy, he'll line you up. You make the call. We'll take the call here at Florida Talk Real Estate. I'm your boy, Johnny C., your air traffic control. Let's get your starting lineup. Good morning to Mike Rauch, mortgage guy from the mortgage firm. Michael, how are you this morning?
I am doing great this morning. Trying to get through these rainy days. I think Christmas Eve is going to be a sunny one for us. I've been paying attention because we're hosting a party, so I want to make sure it's dry.
Excellent. Well, I will keep putting that out in the universe for you, my friend.
Did you get your invitation?
Isn't that the secret? Isn't that what that book's based on? Like just manifesting things by thinking about it and putting it in the universe?
Yeah, positive thinking. Ross probably knows more about that than I do.
Yeah. Well, I'm gonna be honing in on that so we get exactly that. Mike Rauch, great to have you with us on a Saturday. Also, phenomenal to say good morning to Ross Komarinetz with Brightway Insurance, Juno Beach. Ross, nice to see you. How are you, my friend?
Doing well. Good to see everybody. I feel like it's been a while, but then I feel like I did the show the other day, so I don't know. So
yeah, I know.
This rain is terrible. What's that?
They kind of all blend together sometimes, I understand.
I guess. But yeah, I like Mike. I hope this rain clears up. But yeah, it's supposed to be cold on Christmas too, so that'll be nice.
Break out the snow machines.
That's right. All right,
guys. I'm having terrible technical difficulties, so I'm gonna go ahead and give an introduction to Jimmy D. That is our fearless leader for over a decade now. I've told you he runs a top producing Keller Williams team. You can find that team, Florida Home Pros team, with Keller Williams Innovations. Jimmy D, Jim DePola, how you be?
I'm doing good. Happy South Florida. Johnny, I'm going to ask you to do me a favor. Take the plug out of the computer for the mic and plug it in on the left side of the computer. It might be a bad connection, and the mic is connected to the audio for the incoming too. So just pull it out and pull it in the other side.
Okay.
Okay.
I didn't get any of that while I heard pull it out. And I'm pretty sure there's only like two options at this point. So I went with what my gut told me.
So happy South Florida, everybody. Yeah, it is a wet. I was thinking when I was driving down here, a wet, sloppy day today. So it'll be kind of good if you're stuck inside that you can hang out with us for maybe a little bit longer than normal and enjoy the show. We got a lot to talk about today. We're going to be talking about the big news in the state right now is, to me, for our purposes, is definitely going to be insurance, homeowners insurance. Governor DeSantis yesterday signed a new bill into law about how we're going to be handling insurance, at least for a while, because they're going to be tweaking that. Mark my words, what they've done. They're going to be tweaking it. So we're going to talk a little bit about that. We're going to be talking about mortgage rates. Mortgage rates are news too. We've hit the skids on mortgage rates 5 weeks in a row. We've had a decrease in the mortgage rates. People really aren't talking about that too much, but there's a reason for that. And that gets us into the next thing, which is the national economy. Everybody's wondering if we're go into a recession. Well, the housing markets officially said we already are in a recession. We've been in a recession for several months now, but just for the housing industry. So we're going to talk a little bit about that. And we're also going to talk a little bit about the end of the year, about what happened this year in the real estate market. And the other thing I want to talk to you about, maybe towards the end of the show, is does it matter what kind of car I drive, guys? It was funny. I had two people come to me recently and give me advice on what I need to do in order to get to continue to get business in a slowing market. And one of the things they said is that they recommended that I sell my car and get a new car. And I wanted to talk to you guys about that. Does the listings agent's car, or the real estate agent you're working with, does the car really matter as to whether you're going to hire them or not? So we're going to talk about that a little bit, because I thought that was kind of a funny little thing. So, and if everything goes well, let's see, we have a private chat here, so hold on. Okay. Oh, Johnny, you fixed it. Great. Awesome. We should be having a special caller coming in today. I don't want to say who it is, but I can't wait if he calls in. He should be calling in.
Can I guess who it is?
Yeah, go ahead.
Santa Claus.
Oh, that would have been awesome. No. And this guy's like really late. Mike knows who this guy is. Actually, you do too, Ross, because we've worked with him a couple of times in the past, been a long time listener, very loyal customer. And we helped him buy a special type of property a couple months ago, and he's going to come on the show. We're going to talk a little bit about that.
You know, it's funny when Ross said, "Can I guess?" The first thing that popped in my head was Santa Claus. Also,
really,
Ross, we're on that same positive thinking wavelength, bro.
That's right.
Mike
and I have a secret.
I need to pick Ross's brain every week before I do the show, so he could give me like cool ideas to do related to the show, because like you just shame me every holiday. This last one with the Halloween, you had an awesome costume for the show. It was awesome. You know, we created a video on that, and Cam, our video guy, who puts some of our social media stuff together, he has those videos. I don't know if he floated them out there yet, but he has the video where we're talking very seriously about insurance, and Ross has got his mask on for his costume, and it was very appropriate, the type of costume he was wearing when we were talking about the insurance industry too.
I forget what mask did you have on?
I had on the it was like a skeleton onesie that had a hood, but like when you zipped up the hood, it had the mask there.
And it was a skull.
It looked like a skull, and you could see through it and breathe and everything.
Yeah, he was the Grim Reaper for sure. We were talking about what's going on in the insurance industry. It's like the perfect thing. And he's talking all serious, and he's got the mask full face on. It's kind of funny. So we got to get that video out there soon. And also we created another video related that same show with Mike, talking about understanding how to try to reduce your interest rate when you're buying a home. Well, we talked a little bit about that. Remember that, Mike, when we talked about that? So hopefully we'll be getting those videos out soon on YouTube. Our YouTube channel is starting to get back into swing again. We had like a little down spurt at basically from April until now. So hopefully we're going to be adding way more content more consistently. So we're looking forward to doing that. And let me see here. Let me go here first. So
you guys mentioned the holidays real quick, and I figured, the best time is out the gates. Here's my newest holiday dad joke. All right.
Yes.
All you dads out there, especially Star Wars fans. How did Darth Vader know what Luke got him for Christmas?
How?
He felt his presence.
Nice. Like that.
The sad part is I'm not a very big Star Wars guy.
I'm
not a Star Wars or Star Trek.
You got the reference, right? Darth Vader, Luke Skywalker.
Yeah, when you said it, yeah, but I wasn't into Star Wars enough to come up with that myself.
No, but do you get the line, Jim?
I get it. Yeah, I get it now that he says, "Luke, I am your father." Right? That kind of thing.
He didn't get it. Jim,
I don't
he
get
felt his presence.
I know presence and then presence, right? I get it.
Yeah, that's it.
ENCE and ENTS. I get it.
Yes. Yes.
I get it.
Play on words, Jim. It's a play on words.
Yeah.
So the other thing I guess I want to say, I'm kind of playing around a little time. I'm hoping this guy calls in on time. But I also wanted to say thank you to Keller Williams Innovation, my office down here where I'm based. I told you, I think last week on the show that a few days the week before that, I was over in Tampa for the Regional Leadership Council because I'm back on the Leadership Council again. I stepped away for a little while and I'm back, and you have to be in the top 20% of the agents in your office, and you have to be liked enough where they want you to be on the Leadership Council. And you have to be an attitude of giving and helping out other agents and teaching them stuff that you might have skills that they don't have. And I was just ranked again in the top 10 in the office for October. So, no, I'm sorry, November, which is several times this year I've been ranked in the top 10. So thank you guys so much for the listeners, for being there and supporting everybody on the show. I don't know how many people I talked to that do stuff with the team that I don't even know, but I was talking to a guy a couple of days ago, and he's like, oh yeah, Ross already does my insurance, or Mike gave me a refi, a couple of years ago, and things like that. It's just awesome how everybody works together, and we are the one-stop real estate shop. We had Paul Krasker on last week, guys, remember that? And he was talking about student loans, and we haven't talked about student loans in quite a while, and how that program that the president had out is being fought in the courts about whether or not the student loan forgiveness program that he wanted, that the president wanted to support, whether that was going to be passed or not. But in the meantime, there's a great student loan forgiveness program out there that we've been talking about for years and years, and have been helping our buyers get more purchase power by using that program. Because as we've talked about many times, Mike, the student loan debt. I don't know if you guys remember this, but before the COVID crisis, in 2020,
Brandon,
the big problem that we had was 2018, 2019. What was the biggest drag on the economy that we talked about all the time? Student loan debt.
Student loan debt.
It was student loan debt. It was over $1 trillion. Johnny and I were keeping really close tabs of the news about that. And that was very, very interesting. And, then when COVID came, student loan debt wasn't so much of an issue anymore because people had to stop making the payments. They were allowed to forbear their student loan debt. But if they had been in that program, like Paul said, they would have paid off 2 years of the 15 years max that they would have had to pay for their student loans. So that's one of the things that we love about, hold on here one second.
One of the things we love about the student loan program, and of course the whole Florida Talk Real Estate, your one-stop real estate shop, is you get a bunch of pros that are amazing at what they do, and man, the things that can be accomplished if you simply go to floridatalkrealestate.com. You got to get rid of that phone, Jimmy D.
I'm sorry, it was the guy that was supposed to be calling. That's why I wouldn't have done that if it wasn't him. And he said that he has a family emergency. He's not going to be able to make it today. So we're going to just move on with the show. No big deal on that. Okay, so I want to get into the meaty stuff first, which is the homeowners insurance, because my prediction is if they don't fix the homeowners insurance properly, that that's going to be our next crisis in Florida. And the reason why I'm saying that, there could come a point where either we don't have enough insurance companies down here to insure what we need insured, or the ratings for their insurance companies aren't going to be strong enough in order to have the lenders be okay with the type of insurance that people are going to buy. I mean, and if it got really crazy, and I don't think this will happen, but this is just what could happen, and this is why I know that they're going to have to fix it before this happens. Florida could become almost like a cash-only purchase state, where if you're buying a house, you just have to buy a cash because your lender is going to require decent insurance that you're not going to be able to afford to buy. Right?
Didn't the guy that's the head of the way that the state rates these companies, didn't he just resign like out of nowhere? And they were already like planning on loosening the parameters of how they rate these things. So I mean, the ball's rolling for us to just be like, yeah, it's A-rated. We're good.
Let me read you the quote from the governor. The quote in the story, it came in today's paper. Okay, so let me read you this quote. Hold on here. He says, last quote of the story. The governor also addressed the resignation of David Altmaier, the head of the Office of Insurance Regulation, which came a day after the lawmakers approved the insurance bill. And this is the quote from the governor. So that position is open, he said. I would tell talented people that want to get in and be challenged that this would be a great opportunity for you. What a great way to say, hey, we got an opening here. And if you want to be really challenged, come on board and apply for the job. I just thought that was really funny to show, how stressful that position must be right now. And we kind of know because we've seen Ross. I don't know. I think, Ross, you've gotten a few more gray hairs during this last cycle. I know it's been really tough on everybody. And, your function, your function in the insurance industry part is to facilitate people in order to get the stuff that they need so they can get the loans and be insured properly and everything. You're just working within the parameters of the system that's there, right? You just have to work with the equipment you're given. And it's been pretty rough. You had 7 insurance companies go bankrupt in the state this year. 12 other ones pulled out. I don't know how many insurance companies were in Florida to do home insurance, but 19. What I heard is we haven't had 3 insurance companies go bankrupt, more than 3 insurance companies at one time go bankrupt in 1 year. Like more than 3 has never happened. And now we're at 7. So just to get a feel, is it much different right now than what we've seen? New people trying to buy insurance, 95% of them are going to Citizens because that's basically the best policy for people. And it's very rare for other people to get regular insurance policies like with a private company. Is that true still?
Yeah. To answer your question about like how many carriers were offering coverage, I would say probably 4 years ago, before everything completely, went crazy. On any given homeowner's policy, we could probably get 15 to 20 carriers return a quote, depending on where it is and the characteristics of it. And now, unless it's a brand new home, there's one and it's Citizens. So,
for real, it's that different. I had no idea that you had.
I mean, for the we might pepper in 2 or 3 somewhere else if the house is less than 40 years old and has a newish roof, but most of the time.
So let's go over the parameters of what passed. Now, it's very murky. Okay, the Sun Sentinel. We're going to talk about that. We're going to talk about what the governor said when he signed yesterday. We're going to talk about a little bit about what the Sun Sentinel editorial page said, where they said, please don't pass this. Before it was passed, they said, please don't pass it. They felt it was done, that the whole bill was put together, quote, in secret, like behind closed doors, and people didn't get to really review what was being passed. It was being jammed down everybody's throats pretty fast without a lot of review. And then we're going to start off, though, build the foundation of what was passed. But we don't know everything because even the newspaper reporters, I read the Post and the Sentinel multiple times this week to try to figure out what's going on. They weren't really 100% clear as to everything, how it was going to work. And I think that was partly because everything was done so quickly and it came out of the committee and it was voted on pretty quickly by the Senate. And then it was brought directly to the governor, who signed it right away. And even the governor, when he signed it that day, he did a couple of other things. He signed a couple other things. So it kind of got melded in with everything that happened that day. So besides the homeowners insurance changes, they also gave discounts to people who use the toll system in Florida a lot. I think if you do more than 18 trips per month, you're going to get a 50% off your toll bill. So your SunPass bill, right? So they gave you a discount on that. Johnny's got a little bit of grin there if you're on the radio, shaking his head because I know it's coming with that comment. We'll talk about that too. And the other thing they did is they are trying to change around the concealed weapons permit stuff for public carrying. So, I'm sorry. The other thing they did was they offered hurricane relief to the homeowners on the West Coast. They're having a lot of problems with their insurance companies trying to get relief over there. So what they're doing is they're going to do a reduction on the property insurance taxes for those homes while they're going through the crisis, so that their property tax bill won't be so bad, which I think is kind of fair when you're paying for land, right? Because that's all you got left is land, right? You don't have the house anymore, and you're paying, the assessed value as if the home is there. So they're trying to give a discount on that for a while to try to get everything fixed. So let's go to the insurance stuff. So the easy one that we know is they added $1 billion, Ross, to back reinsurance for citizens. So they already had $2 billion set aside. So now it's a total of $3 billion. So in layman's terms, Ross, that $3 billion would be used if any insurance companies couldn't handle their claims, right? If they couldn't handle their claims on their own, it's like reinsurance for them, like a safety net to make sure that those companies could handle what's needed, correct?
Well, so what reinsurance is it's insurance that insurance companies buy to pay claims if there's a catastrophe or large claims. And you buy it from companies like Lloyd's of London, AIG, there's a bunch of different multinational companies that sell it. And what happens over the last few years, that has just gotten so expensive that the carriers can't afford it, and maybe they're not able to get as much as they want at the terms that they want. So the state has set up another, basically the state will sell it to them.
Okay, and then part of the reason why the reinsurance, and the reason why they're doing that, some reinsurance companies are threatening not to back the insurance companies here in Florida because they feel they're not solvent enough in order to handle their business. And they were worried that their rating system wasn't really accurate to their financial stability. So Florida is stepping in to be like a safety net for the reinsurance industry. So taxpayers are on the hook now for potentially up to $3 billion, right? So there's a big risk there. Now,
yeah, that's an important point right there, because we were saying the state and Florida, it's taxpayer funded $3 billion. Johnny. So
but the extra $1 billion that they just made, that you actually have to purchase. They're going to have like some sort of rating system to determine how much that premium is going to be. It's just going to be
more
cheaper.
like a true reinsurance. It's just taxpayer funded reinsurance for
the taxpayer is now the investor, basically.
Yeah, which
we get a return on that then.
I mean, there's whatever that's going to be reasonable rates. I don't know what what that is.
It probably just funds that program, right? Like they'll probably have to continue it and refund it, and so maybe those returns help keep that as an option for reinsurance.
Now, another thing.
Let me ask a quick question, just right in here, because Ross says reasonable rates. Ross, you've been in this game. You're deep in it every day. Like you warned us about how things were evolving, like as it was going. People that listen to the show shouldn't have been shell shocked when they got their increases, because you were kind of warning us all along. So if you just go back like 4 years to where rates were, we ever going to get back to that?
I don't think we'll get back to that low. Just over the last 4 years, everything's gone up. Inflation affects everything. So insurance, that's all based on materials and all that. So I don't think we'll get to that low. But hopefully, and with what's being done, hopefully it just won't be going up as much.
So I think I don't think my numbers are off, but the average homeowners policy like 4 or 5 years ago was around 1,500 to 1,800, I think, in the state, and now it's over $4,000, right?
I think it's 4,200 now.
Yeah. I don't think we're ever going to get close to the 15 or 18 or even 2,000. I think we're in that $4,000 zone forever now, and now it's just a matter of trying to stop the bleeding and see if we can kind of cap it at that. I feel like that's where we're at.
Well, here are some statistics. Oh, go ahead, Mike. Go ahead.
I was going to say, I think that's an interesting prediction, Johnny, but part of this legislation, which we haven't gotten to yet, like all like the experts, and I'm sure there's two sides of this argument, but the experts are the lawsuits are the problem, right? The litigation is the problem. And so if they can stop the big bleeding of lawsuits and litigation and damages and like these numbers just being crazy high going to the legal process and legal fees, why wouldn't we be able to get back down to reasonable rates that essentially say, hey,
Well,
we're going to cover claims. We're going to
Well,
cover
I'll tell you
claims.
why. I'll tell you why.
Okay,
This
here we
is the
go.
way they wrote.
And just to tie it all in real quick, that's when Ross said, inflation. I was like, well, that's fair. But then I was like, but they blame it all on litigation, so you can't.
No, I'm just saying, like, 1,500. Just because of inflation, that like, is milk going to go down to 50
Well,
cents
the average value of
because
a
we
home,
got more efficient with cows or something.
What Johnny's not taking in consideration also is the average value of homes has more than doubled over the last 4 years.
Well, that's the funny thing that me and my friends all talk about. They're like, hey, but your house is worth.
Well, yeah, but what I'm saying is like if you were insuring a house 4 years ago, the same house, like your house, right? Your house might have been insured at, I'm making up numbers here, okay? But your house, let's say it was insured at 200,000 4 years ago. I'm just making up a number, and now it's 400,000. You're going to pay a higher insurance policy because your house is worth more, and you have to replacement value and recoverables and things like that.
Oh, sure.
So I don't think we're ever going to get back to that unless the property value is decreased, to back to those numbers. But let's set.
Hold on, Jim. But remember, you're insuring what it costs to rebuild the home, not the value of the home, but simply what it costs to rebuild it. And so
which is way more expensive than 4 years ago.
Construction costs and materials and labor are going to go up. So I think that's Ross's point, right? Like just the cost of doing business
exactly.
goes up.
But let's go over some statistics so that we're talking about that. So the average homeowners policy increase in the nation, according to the articles I read, is 9% a year. Florida is 33% a year. Okay, just to put that in perspective.
By the way, I was seeing 40%. We were seeing 40%. So I was saying
Miami-Dade
2020.
Yep, and Miami-Dade was 44. Miami-Dade's still 40% right now. Dade and Broward, Palm Beach and Broward is 33% on average, right? Dade's still down at 40. The other thing is you're right about the litigation thing. Keep reading the same statistics. We're 7% of the insurance claims, but we're 76% of the, or 76 or 72% of the actual. What is it? The legal fees or the actual cost?
No, it's 7% of claims, and like 80% of lawsuits claims involving a lawsuit.
Yes, claims of where like 80%. Okay, so it's like way out of whack compared to the national averages, or just way out of whack. Before Mike, let me just set one more thing. So the reason why we're not going to see the premiums go down, like Johnny was talking about, like to see it scale back in the new bill that they passed, there's nothing in there for that. Nothing. Okay. They're not asking so the insurance companies are getting everything, not everything they're asking for, but a lot of the things that they wanted, and they're giving the consumer nothing. Okay. One of the legislators were so mad after the bill was passed, before it was signed by DeSantis, he said, my constituents are getting screwed. That was the line he said, because there's nothing in there to make them reduce the premiums to get these benefits they're getting. Now that might happen naturally,
but you can't tell a company to not operate to turn a profit. You can't say, hey, well, you know what? If you want to operate here, you can't increase your rates by more than 10%. And it's like, well, okay, we'll go out of business then.
Yeah, and that's the point I was going to make. Maybe you have to go through this pain that we're going through right now and give the insurance companies what they need so they can get some breathing room. And then maybe we'll start seeing, then maybe we can go back and then start, because they do go through that process with the insurance regulators where they have to ask to increase their premiums, right? Right, Ross? There's a process. They don't just do it willy-nilly.
Right. The rates have to be approved by the OIR. Mm-hmm. So, but I mean, here's the thing. We're not going to see any immediate relief right now. So,
right.
With the attorney's fees being wiped out, the assignment of benefits being done, what's going to happen is over the next year and a half to 2 years, the insurance companies can be able to gather all that data, see how much money they're actually saving and how much they're actually sticking into their, into their reserves. And then it's a free market. So if the company wants to grow and turn up and acquire more customers and become more and make more money, they're going to have to offer competitive rates. So if everybody's, if everybody's just high, people are going to start to, hey, we're going to try and pick up more business here. So we're going to offer a competitive rate on this. And so you'll start to see rates slowly but surely, I would think, assuming everything goes, the way it should be, that, in 2 years, you'll start to see the rates start to come down. And hopefully, all those crazy increases will be done by then.
See, that's what I'm thinking too, Ross. I'm thinking the same way, that it's just going to take time, and we got to go through this pain. What were you saying, Mike?
Yeah, I was gonna say, I think the case that they're making is like, listen, hey, if you want to be a home insurance company in Florida, you're almost guaranteed to lose money right now. So how can we change that? How can we make it so you can actually be profitable, and so that we get more players come into the sandbox and actually offer competitive rates in Florida? So how do you make that happen? You have to stop the religious. I mean, that's what they're saying. I don't know. We'll see how.
I mean, if you look at it, there's not one insurance company that's like, oh, all these other, everybody else, they're garbage and they just can't run a business. No, they're all saying, hey, these attorneys are just sucking cash out of us, all of them. So it's not like, they're just making it up.
Now the flip side of it. Oh, go ahead, Johnny.
Well, I was going to say, there was one piece for the consumer that came out of Tallahassee that felt like, oh, at least, hey, there's a little something for us. But I don't know how they enforce it, was that they were going to try to streamline the payment of claims quicker, like get that done in a much more efficient
That's
manner.
total bull.
They reduced the time. Yeah, no, they reduced the time from like when the insurance company has to get back to you after filing the claim. They reduced the time for the insurance company to come out and do their inspections by law. And they're also, reduce the time by that, what they have to getting the check out too. So they reduce the time that the insurance, they're basically saying you can't drag your feet. Get out there, pay the claim.
Yeah. And I don't, we'll see if that really works. Cause my experience, Ross knows that I went through that experience with Heritage. And I don't mind mentioning the company because, my God, what a bunch. I was very disappointed with the process, and I felt like we were right. They didn't want to pay. They didn't want to pay anything. We ended up getting triple what we started out asking for because the damage to my house kept getting worse and worse, even though we were trying to fix it, and they weren't doing stuff. And we went through mediation 1 billion times, and we kept winning. And then they kept just coming up with another excuse why not to go forward on the claim. And I wouldn't have been able to get the money to repair my house that I rightfully should have got because I paid for the premium and that's what they were supposed to do if I didn't have the attorney, right? Which eventually couldn't go to court because there was a clause in there we weren't allowed to sue. But the attorney told me when I hired him, I was worried about hiring an attorney. I was like, how much is this going to cost us if we lose? Because his first answer was, you're not going to pay me anything. The insurance company is going to pay me. I'm like, how does that work? What happens if you lose? Like, I asked the deeper questions that most people don't. Most people's like, oh, it isn't going to cost me anything. Okay. I go, well, what happens if you lose? He goes, look, Jim, as long as I get $1 from the insurance company, you don't have to pay for me. I just need $1. If they give me a claim of $1, you don't have to pay, which is exactly what happened. I didn't have to pay anything, and I got what I wanted. It took me 14 months for something that was so basic at the time, and they just didn't want to pay. And so the regular people that don't do anything wrong, and they just want a regular claim, they're being treated like they're scuzzbag people that are trying to rip off the system when they're not. Now, there are a whole bunch of people ripping off the system. It's ridiculous to me that you have 2 years to file an insurance claim from a hurricane. Your house was damaged and you have 2 years to file the claim. That to me is ridiculous, right? So I understand that there's some things that has to go in favor, but the idea of not being able to pay for an attorney, right now, so the new law is if you want to hire an attorney and you want to go up against your insurance company, you're paying for it, period. So if you win the claim, you're going to have to pay the law firm on top of it. If I
By
had
the way,
done
that's the way it is in most states.
Really? Is that? Yeah, but most states, I'm sure, don't have the delays that we have down here.
So,
These
like,
insurance
even
companies
if,
don't
even
want
if,
to
like,
pay. We've seen it in too many hurricanes. Look what happened down in the Keys, where it was insurance churning for so long, where the flood company was saying, this isn't our claim, that's the insurance claim. It's wind damage. And the wind damage company saying, oh no, it's flood. And then the people are sitting there living in a house with 3 walls. And living in the house with 3 walls because the insurance company won't pay them. I watched that. I went down there and reported on it. So I saw what it was like in real life for a lot of people. And they're not dealing with any of that. And I understand that we have a big legal problem. I'm not denying that. But I don't know if this is going to fix it all. But I'm telling you, I don't trust the way it's going to go down. There's going to be a lot of people that are going to have real claims that are going to still have problems with this. A couple other things I wanted to talk about, though, Ross. What's this deal where when you go to get insurance now, if a private insurance company is less than 20% more than Citizens, that's where you're supposed to go? Did you read about that?
That's the way it's always been. That's
So explain that. So I thought it was like that. So explain how that works. So I come to you, get insurance policy. And
so
then,
Citizens has what's called their clearinghouse.
okay.
So when we do a quote inside Citizens, it checks with, it almost like kind of is like a little radar, and it checks with like a handful of companies that they work with or whatever. And so if one of those companies comes back within 20% of the Citizens offered premium, you can't write the policy with Citizens. And then also, if we're, let's say, I'm getting you a new policy because you just want one, right? You want to save a little bit of money. So you send me what you're currently paying. And if what you're currently paying is within 20% of the Citizens premium, I cannot write the policy with Citizens.
That's how it works. Okay. And then Citizens also checks themselves.
Well, we have to provide the proof of prior insurance to Citizens that's going to show the coverage in the premium. So they're going to do their calculation there. But Citizens inside that, what's called their clearinghouse, that little radar, it checks with, a few other companies to see what those premiums are. And if those companies come back, like I said, Citizens won't let you convert it to an actual policy, and you've got to go to that company and go get the policy from there.
Right. So, do you expect, based on what you're seeing now, that less people are actually going to, a significant amount of people are, like you're saying, almost everybody is getting Citizens unless they have the newer home, and the brand new roof or whatever. Okay. Do you think with the way, I thought the only thing that was changed on that 20%, it isn't just when you buy the home, but like when you reinsure the home, now they have to check every year after you, let's say the first year you get Citizens, you go re-up the next year, you have to go through that process.
Right.
That is
nobody wants Citizens.
Right.
The only reason people want Citizens is because the premium's cheap, or that's the only thing that they can get to, get a mortgage, buy their house. But I don't think anybody wants Citizens coverage. It's limited, so if there's something that's going to be comparable for, hopefully not 19% more, but, maybe 10, at least you're going to get better coverage and more options.
Can I ask what's the reputation of Citizens as it relates to paying claims and lawsuits filed against them?
I mean, I don't know how many lawsuits they've had filed against them or anything like that, but I mean, I haven't had anybody complain about Citizens any more than any other company that, with the claim. So,
yeah. I think that if you're the everyday consumer, Jim, and you look at this law that was passed, and you have had a claim process that required litigation, like you're not answering the door to some roofer to get a new roof. You actually had a mold claim or water damage or whatever it was, and they put you through the ringer to the point where you had to get an attorney involved, and not just because you had to get the claim paid. You look at this legislation and you're like, these insurers got everything they wanted, right? Make it very hard for the consumer to file a lawsuit. Make make it forced negotiation, or what do they call it? Whatever, arbitration, right?
Arbitration.
Tighten timelines for the insurers making a decision. And if you have the mindset that insurers in general want to collect as much money as possible and want to pay out as little money as possible, this legislation you could look at and be like, well, okay, you just gave them everything they wanted.
There was one bone they threw. They opened up. They threw in more money for investigators to make sure that to keep the insurance companies honest on the claims.
Okay.
So they're adding money to add in, to beef up their investigation division. So they backed the insurance industry with $3 billion of reinsurance if it's needed. So what did they do to make sure that the insurance companies are being honest about, dealing with the claims in a timely manner? $1.7 million.
Yeah.
Right. So, with state officials, that's probably like 20 employees. They hired 20 people for the whole state to make sure that this stuff is going through. And
so let me ask you this.
Probably very liberal. I'm probably being very nice to them about 20 people for 1.7 million.
Where do those experts come from, Jim? Are they sourced from the insurance background, or are they sourced from the legal background?
Mike, we're not even there yet. I mean, the law is like literally still drying. They're still
there's still an opportunity to sue the insurance company, but it has to be for like breach of contract.
Yeah. Yeah.
Oh, and you have to pay the legal fees.
Yeah.
Well, no, that's the I think. Sorry, my back is bothering. I think that's like that's the one way that you can get the settlement fees back.
I got you. Okay.
Oh,
if there was a breach of contract, if they basically just didn't perform,
right? If they acted in bad faith, I guess.
Right.
Yeah. So it's really interesting because it's all over the place. I mean, let me just wrap up with the governor. DeSantis said it's not a question about when people were complaining about that it was too much on the side of the insurers. He was like, it's not a question about helping the insurance companies. What it's about is creating a market where people are going to go, where people are going to want to do business in Florida at all, right? So it's not helping, he's saying it's not helping this company or that company. It's trying to create a market that's conducive to where insurers want to play in Florida, want to be involved in Florida. So I get that part. I mean, there's no easy options here. So as hard as I am about, as passionate as I get about my feelings about some of this stuff, I understand that we do have a big problem and we don't have the same problems in other states. Now, I don't know, maybe, I always wondered, like in California with all the fires, with all those fires and everything, I don't really hear about them complaining about their insurance, like coverage and stuff like that, so I might be wrong.
You can't, they're not that's one way. It's not the one-way attorney fees,
Yeah. So I know stuff has to be done. Hopefully this is going to help. I still think they're going to be tweaking this for a couple of more meetings. I think that, they're going to do this for 6 months, 8 months, do studies, figure out what's working, what's not, tweak it again. Maybe some of this stuff will go more in favor of the homeowners where, like what we were talking about earlier, as they do studies and figure out how much they're saving, maybe that's going to spill down to the consumer eventually. But we'll see. We'll just see how that's going. But in the meantime, so in real life, it really isn't any different now, Ross. When you're buying a property, right? There's really no difference in the process or the results really right now. You buy a property, unless it's a brand new home or, it meets a certain criteria, you're probably going to Citizens, right? Mm-hmm. Is that correct?
Yeah. Yeah.
And
that's all of it.
And probably hardly anybody's going to be under that 20% parameter compared to Citizens for a while, right?
Yeah, for a long time. Yeah.
Yeah,
they're trying to. they're trying to, do away with that. One of the things that they did for Citizens is for non-primary residences, those aren't going to have the same like cap that Citizens does now. So those types of rates will go up higher and then be more in line with whatever the market is.
Well, so if you're like a landlord or an
No, so if
Airbnb
it's a tenant occupied property where it's that tenant's primary residence, you're not subject to that.
But if it's like an Airbnb or a short-term rental thing or something like that,
correct. Yeah,
that would be different.
Yeah.
Or just vacant.
So if you were in that situation, you didn't have somebody living there. So a landlord, so one of the benefits of landlording would be, or a benefit to a landlord would maybe now for insurance purposes is to have the longer term rental where somebody's living there full time. But if
for a Citizens policy, they don't accept like little short term 3-day rentals. This is going to affect your secondary homes. Your
vacation home.
Yeah, your vacation home. Stuff like that.
Mm-hmm. So we're just going to have to buckle down and go continue on this wild, bumpy ride and see what happens when we're going to go forward. We still don't know all the results of Nicole yet. Even Ian, we're not exactly sure of all the money, how much money is going to be expended for property insurance, home insurance stuff related yet for those 2 storms that went through. So it'll be very interesting to see how this all works out. We know it's a mess. I think that what they did this time is better than what they did last time because, they tried to do this back in May and that didn't really help at all. So hopefully this new system will work better, but we'll see. Right.
And I thought you were going to lead to this, Jim. So the process for obtaining insurance is still the same. And you have to be working with, somebody who's got your best interests in mind and can give you options. Right. So if it's all about, Ross and his team are great at saying, okay, listen, here's what we recommend. But if you have to pinch pennies because of mortgage purposes or simply because the cash flow, here's some options that are a little bit more reasonable. And he's always giving you the best of what's out there. Right. And so those options are limited, but that's what you got to go with. Right. You got to work with someone you trust who can give you options and make sure you're taken care of.
And really, Ross, he's been with us now. I don't even know how long. The show, by the way, we're at 10. I just figured out this today. We're at 10 years, 49 weeks. That's how long this show's been going. 10 years, 49 weeks. 3 weeks from now will be our 11th year anniversary. And I think, Ross, you've been with us since 2013, if I'm not mistaken, almost the whole run. And, Ross, just like Mike, when it comes to mortgages or insurance, they're always going to do the right thing for you. We've seen it proven hundreds and hundreds of times over the years. They're always going to do what's best for you and your family and your situation. So when you have questions, that's why you give us a call, because we're going to give you honest answers that best for your family. I just met with 3 people this week that we're probably not going to end up doing deals with, but we helped them tremendously get the information they needed to make the right decision for them. Right.
Beautiful.
And that's what Ross is all about. So this is a very complicated time with homeowners insurance. So you need somebody that you can trust and talks to you like a real human being and gives you real answers and real solutions. Ross has been very creative through the years. We've seen times where we were promoting like crazy. Hey, the insurance premiums have gone down tremendously. It's a great time to reduce your mortgage payment by changing your insurance policy. And we did that for so many people. And when rates started getting super high, right, premiums started getting super high, Ross was there to come up with ways to satisfy your loan requirements, but getting you breaks on your insurance policy by tweaking the terms of the policy that you feel comfortable with. So please, if you have any questions about insurance, you got to thank the Florida Talk Real Estate team and Ross Komarinetz from the Brightway Insurance Juno Beach office.
Juno at FloridaTalkRealEstate.com, your one-stop real estate shop. Access to the entire team. They are pros. They're experts at what they do, and you can get them all at FloridaTalkRealEstate.com, your one-stop real estate shop. It's floridatalkrealestate.com.
So I want to just end this segment. We'll take the 10 o'clock break, Timothy. I want to end this segment with the market stats, because we really haven't talked about them in a while. That will get us into Mike on the next segment. It'll be a good transition. So, we're almost at the end of the year, but the way that the market stats work for the MLS is, which is the most accurate information to determine really what's happening in the market. Like November's report isn't going to come out until like next Monday or Tuesday. And then we won't get the end of the year report for December until like January 20th. So this is as good as it's going to get for us, probably, as far as what happened throughout the year. And bottom line is, what we've seen is in all, I checked the 6 counties that we covered directly, which is Indian River, St. Lucie, Martin, Palm Beach, Broward, and Dade, right? Those are the areas that the Florida Home Pros cover directly all the time. But like Ross and Mike, they cover the whole state of Florida, with their services. And in the 6 counties we had, what we've seen in the counties is, through October, is about a 25 to 30% drop in the amount of closed sales in the region, which is very significant. 25 to 30% drop. That's been very consistent as we noticed that the interest rates have risen, right? We started at 3.11 at the beginning of the year. We're not at 3.11 anymore. And a couple other things I noticed. For many, many months, the average sale was 100% of list price to sold to contracted price or sold price. 100%. And there were some months where we got some counties got as high as 102% of list price to contracted price, right? And that was the median average, right? So at 102%, that's kind of unheard of. You put a house on the market, you're guaranteed to get more than what you're asking for it, pretty much, right? That's pretty crazy town. Now we're down to about 96% throughout the region, right? So now, which has been pretty standard for many, many years. If you go back to 2018, we were somewhere between 93 and 97%. So now we're at 96%. So we're more, while it's shocking to people because of the market we just went through, we're back to more like a normal, what you kind of expect when you put your house on the market. You put your house on the market for $100,000, you get $96,000 for the contracted price, right? So that's kind of common. The other thing that we're seeing is that the months of supply of inventory, right? The county that had the smallest month of supply inventory throughout the year, let's go from January to October. Let's just talk about months of supply of inventory. What that means is, let's say at a 6-month inventory, meaning if no other houses come on the market, it'll take 6 months for the houses to sell based on the current sales rate. That's a normal market. That's not a seller's market. It's not a buyer's market. It's a neutral market, six months, right? We got to under a month of inventory or supply in several counties throughout the year, right, on the monthly reports. What is the lowest monthly inventory in any of the counties? What was the number, do you think? So if 6 months is normal, what do you think the lowest number we got this year for one of the counties on 1 month?
Wait, are you talking about any month this year?
Any month this year, January through October, any of the counties. Which county had the lowest monthly inventory?
Oh, which county?
I say Martin County and 0.6.
Oh my God, I'm not even going to ask everybody else because that was so close, Mike. Did you read it? It was Martin County 0.8 months. Think about that. What's 0.8 times 31? Right? It's like 20, what is it? Like 24 days or something. So
it'd be like eight days, right?
Probably like 24.
80% of 31 days. I'm sorry,
what am I talking about? Yeah.
It's like 24.
Almost
23.8.
Yeah, so 24 days, right? It's pretty close. So 24, right? So 24 days, if no other houses came on the market based on the sales in Martin County 1 month, it would take 24 days and they'd have no homes left. That's how tight the inventory is. When you're in that kind of market, that's a strong seller's market, super strong, right? Okay. And then anything over 6 months would be the longer you get over 6 months, the stronger is the buyer's market. So what we've seen in the counties is basically we've doubled or tripled our months of supply. We're hovering right around 2.8 to 3.2 months of inventory throughout the county, the 6 counties right now, right? So we're about 3 months. 3 months is still half of a normal market. So we're still in a very strong seller's market. So this is almost counterintuitive to what people think. They think if they put their house on the market, it's not going to sell. It's not true because the inventory is still very low and it's still in favor of the sellers. But what is happening is it's taking longer to get that sale. So for example, I have St. Lucie County pulled up right now. In St. Lucie County, the days to get into contract is 24 days. So if you put your house on the market today, the average home is going to go into contract in 24 days, right? A year ago this year, it was 10 days. The lowest Martin County was at any time this year was 8 days on market. The average home was selling in 8 days on market. Now it's 24 days. 24 days is not bad. In 2019, we were at 68 days on market. It was very common, right? So we're still low compared to that. So the days on market is increasing. The month of inventory is increasing. So now the median time to contract is increasing. The contract to sales price, the sales or list price to contract price, that's decreasing. So now we get to what everybody cares about. What's my house worth, right? The median sales value. So like in Martin County, just to give you an example, we're going to go over a couple of these counties. Right now, in October, the median sales price for a single family home was $379,000, right? So throughout the year, Martin County got as high as 400 in May, it was $444,000 was I can't even believe I'm saying this in St. Lucie County. $444,000 was the median home sale in May.
So you keep bouncing between Martin and St. Lucie. Which one is this?
This is St. Lucie. Okay, sorry about that. Yeah, so St. Lucie County in May, they got up to $444,000 for the median sales price for a single family home. That was the peak for the year. And then since there, we went from 444 to 424 to 416. Then we bumped up to 424 again. Then we dropped to 414. And then this year we're at 380, 379, right? So we went from 444 of the high down to 379 as of today. Now we started the year.
What's that, like 15%, Johnny? Drop 440 down to 380. Yeah, 15%-ish.
Yeah, 15%. Now, here's the interesting part. In January, we're at 378. Today, we're at 379. Okay, so that's St. Lucie. Now, let's take a look at Martin. I'm saying everything wrong, guys. I apologize. Let's go to Palm Beach County. Okay, so Palm Beach County, the median sales price today is $570. We started the year at $526. So we increased by about 10%, right? From the beginning, from January until today. But our high was
through October, right?
Through October, yes.
Yeah.
Our high was June of 620. So Palm Beach County, the median sales price for a single family home in June was 620. That was the high for the year. But now we're off of that by 50,000. So we got as high as almost 20% above the beginning of the year, and then we lost 10% of it, right? So we're 10% better than we were at the beginning of the year for the median sales price through October. Okay, now Miami-Dade County. Hold on here. Miami-Dade County. had it on the right screen and I didn't. Here it is. Okay. Miami-Dade County, we're at 575 today, through October. We started out at 520. We only got up to a high of, this one's interesting. We only got up to a high of 579. So we went from 520 to 579. That was June. May, June was the big time for the year for us. Okay. We got up to 579. Now we're at 575. So again, we got about a 10% bump for year over year up through October, through January till today. But we're haven't gone above that June price. We've been seeing decreases or staying flat compared to June.
That doesn't sound like a housing recession, Jim. What are we missing?
Well, when you have 30% less sales, inventory climbing, list price to sold price decreasing, right? All those are indicate, and that our peaks were this summer. We've peaked out in the summer, and either we're holding tight at that. One county's holding tight. Everybody else is going down from the summer. I think that we're in a changing market without a doubt. So in Broward County, we started January at 500. Today we're at 540. So that's less than a 10% increase throughout the year. And we got as high as 600 in Broward. So we're actually down more than 10% from our high, or almost 10% of our high, but we're still 10% from the beginning of the year, because we started out at 500, we're at 540.
Almost leads you to believe, like, where would we end up if the Fed never increased rates? Like, where would we have just? It didn't feel like they were going to stop climbing. Like they were just going up. I wonder where we'd be right now had they never adjusted the rates. I mean, I don't think we'd have stopped. I think we'd still be climbing.
I know
would the bubble be growing, John?
Getting bigger. Yeah, I think what would have happened, Johnny, if that happened, I think that what we would have seen is we would have seen the northeastern migration down here would have continued to be as strong as it was at the beginning of the year, because the northeastern migration down here, it did slow down a lot. And the reason why is that their market slowed down. So when they were trying to sell their stuff up there, they were experiencing the same thing we were experiencing down here. Hey, how come I don't have 15 offers in 12 hours? How come I don't have 100 showings in one day? Right? How come nobody wants to buy my house at full list price and with no inspection period?
That kind of only happened as rates started raising, right? I mean, they're
exactly. That's right. Exactly 100%.
If the Fed never does that, the bubble just keeps going.
It would have been very interesting. It would have been very painful, more painful than we're going through now, and very interesting. So what are the takeaways? We always try to, because I know I want to wrap this up so we can take a commercial break. What are the takeaways of this? Number one, if you're selling your home, as long as you price it right, you're still going to get your buyer. The days on market, while they have increased, it isn't crazy. We're still like off by a half to 2/3 of what we were a few years ago for the average days on market. So all that means is if you do it right, you're going to get, and you price it right, and you have value in your home, you're going to get the house sold for a very fair price. The last couple of homes I sold, I think the last 3 homes I sold, it took me 40 days to sell them, but we got 98% or higher from the list price to what we closed at, right? Which is better than the market. I do better than the market. That's been very consistent with my team since we started this in 2012. Even when we were doing short sales, we were getting more money for our sellers than most of the time than what the market was showing. We were always doing better than the market because of our program. So the first thing is, if you need to sell the house, it isn't a horrible time to sell. Everybody thinks it's a horrible time to sell. It isn't. You just have to do it the right way. And you have to really know your numbers and understand what's going on in your neighborhood. For buyers, waiting around is very risky. And there are 2 reasons why I'm saying that. And I really like to get these professors on that says that South Florida is a rental community, not a purchase community. I'd like to get them on the air and talk to them about that and understand where they're coming from, because I don't get it. With rent increasing as high as it has over the last 3 years, I mean, it's ridiculous how rent's increasing. And to be at the vagaries of that, and to have your landlord dictate what's going on with that, I wouldn't want to be at that if I didn't have to.
What's their position? Their position is the timing is to rent versus buy. You're like waiting to buy. Is that what they're saying?
They're saying that buying isn't very good right now, that you would be better to rent because of affordability of the homes, and that they feel that the market is overpriced.
Okay.
Right. However, what I don't get is that compared to what? Compared to renting? Because, they're also saying that we're the worst rental market in the whole country.
Yeah.
Worse than San Francisco, worse than New York per capita, right? Per income.
Maybe
So
what
we're
they're
the
saying
worst
is rent in another state, and then when the market gets better, buy in Florida.
I think
Yeah,
they're
that
saying
would be
you
a
actually
good.
should rent to
Yeah,
own.
commute from Blairsville, Georgia. Just drive down every day, right? Because it's cheaper up there. But so if you're a buyer, we've just seen the interest rates decrease almost 3/4 of a point, which we're going to get to in the next segment. If you were waiting around to see what was happening and you start getting involved now, and we had a 5-week decrease, we might start seeing the interest rates to start going up again, and you might have missed that little window where you could have saved 3/4 of a point on your loan. So the best thing to do is go out there. If you're serious about buying and you want to buy, don't really worry about the market. Know your numbers. Go out there and find out what your real numbers is. We have a great system. We have this guy, Mike, that we know that will get you your numbers like you can't believe. And then he's going to get you this great app. And you're going to be able to know on every house whether you can afford it or not afford it. And it's an awesome app. And you really know your numbers. And then you don't buy until you find something that you want to buy. Don't be rushed to buying something you don't want to buy, because you are going to be paying a higher interest rate than people paid a couple of years ago. So make sure you want to buy it and you want to stay there for a while. My opinion is 3 to 5 years minimum. And then you're safe and don't worry about it. Buy your house, right? Get your tax breaks. Enjoy your house. Have a place that you own and not be wondering what your landlord's going to do to you, right? So those are my advice to the buyers and sellers based on today's market. Johnny, do you mind if we go ahead and take a break? I know we're running late.
Let's do it. Yeah, the reality has always been, and we try to emphasize it. Look, the best time to buy a home is when it's best for you and your family. Knowing your numbers is everything. Having a team of pros around you to support you and guide you and give you the expertise that you need. I got that just for you. It's FloridaTalkRealEstate.com, your one-stop real estate shop. And for over a decade now, we've helped so many people in our listening area. You can be next. And remember, you can change lives by sharing FloridaTalkRealEstate.com. You never know who needs what. Not all this stuff's talked about on the regular. So know it, use it, love it, and share it. It's FloridaTalkRealEstate.com, your one-stop real estate shop. 4 minutes from now, we get back at it, a little reset. And, of course, if you want to be a part of the program, we got a toll-free number. You can jump on right now, and we'll get right to your phone call at 877-927-6969. Thanks for being with us every Saturday. Florida Talk Real Estate, 2 hours of infotainment. It's right here on Real Radio.
Got something to say? I got something to say. Text us at 47142. Start your message with Real Radio. Standard data and message rates apply, and don't text while driving.
From the Gordon & Partners Weather Center, have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. Cloudy conditions with scattered showers this afternoon as temperatures remain in the 70s with a northeast wind at 10 to 15 miles per hour. Still cloudy for tonight with occasional showers as lows return to the 60s by Sunday morning.
This report is sponsored by InvisibleFence.com. Invisible Fence Brand's mission is to keep pets happy and safe. Their containment systems are the most advanced on the market. giving your pet complete freedom and you confidence in their safety. Through the end of the year, get $300 off your system when you schedule your free consultation at invisiblefence.com.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Download the free iHeartRadio app for all your music, radio, and podcasts. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Banging it out on a Saturday. It's 2 hours of infotainment. That's what we offer you, and thank you for consuming it on the regular. That's 92.1, 101.7 on the old terrestrial radio. Your free download, your iHeartRadio app. That makes you really accessible worldwide. It makes us accessible worldwide. Thanks for getting that free download. And we live stream as well. Florida Talk Real Estate on Facebook. Find us on YouTube. Florida Talk Real Estate LLC. Not only streaming live every Saturday, but that is home of a ton of informational videos for you to consume. Chunk informational videos that are also entertaining. 2 hours of infotainment every Saturday. We try to give you that information you need and a little entertainment to go along with it. I'm your boy, Johnny C. Mike Rouse with us, the mortgage guy from the mortgage firm. Hello, Michael.
Hi, Johnny. Hi, South Florida audience.
Nice to have you
Welcome.
with us, as always.
Thank you.
Yes.
Thank you.
Always great. If you're wondering, that was Jimmy D typing is what you were always hearing right there. We're going to fix that moving forward, though. Ross Komarinetz, Brightway Insurance, Juno Beach. Ross, how are you, my friend?
I am doing well. Doing well.
Always
good show today. Good show.
Yeah, I tell you, that information definitely being hammered. No doubt. We're loading you up, and we got a ton more to get to. We always take you until 11. Of course, we pass the baton to the locker room. We still got plenty of time and opportunity for you to be a part of the program. 877-927-6969. Our producer extraordinaire, Jimothy, will line you up. You make the call, we'll take the call. Of course, Jimmy D's with us on a Saturday. It's Jim DePola, our fearless leader. He runs a top producing Keller Williams team, Florida Home Pros with Keller Williams Innovations. Jimmy D, how you be?
I'm doing good. Mike just gave me a very good tip on what to do when I'm typing, so I'm going to do that from now on. So sorry, guys. I got to put my speaker on mute while I'm typing. So I got a metal desk, so as I type, it's very echoey, as you could hear.
Jim, can I ask you, when you were back in the newsroom, was there ever like a competition, maybe unwritten, about who could clackety clack the loudest and fastest?
Not the loudest, the fastest, probably. I'm sure. Okay. But I started on the manual typewriters.
Well, yeah.
We didn't even use electric. I had the manual, the old 1930s manual typewriters is what we used. The Underwoods, they were called Underwoods and stuff like that. So in the newsroom in the college, because we didn't have any money, that we were college paper, we had all manual typewriters with the ink ribbons that got your hands all black and everything. And then how you typed, you had a paper towel roller hanging on the ceiling, and it had a huge roll of it was almost like the butcher paper that you use for butchers. And then you would roll it from the ceiling into the typewriter so you could type. You could, type forever. You didn't type on 8.5 by 11 pages. You typed on a huge roll of butcher paper. And then, like, when I was done with my big investigative stories, some of them would be like 30 feet long. And that's how you did it. You rolled it out on the floor, and then you'd start editing it. And then when you wanted to change sentences, there was what you would do is you would take an X-Acto knife and you would cut the sentences out, and then you use rubber glue and then paste it to the other area where you wanted that sentence to be. And that's how you came up with the terms on electronic computers for cut and paste.
Cut and paste.
It was the X-Acto knives and the rubber glue, cut and paste.
Man, you're taking me back. You're taking me back to audio editing when I was in at Connecticut School of Broadcasting. We actually, believe it or not, early 2000s, still learning reel-to-reel editing. And you had to find it, and then you use the grease tape or the grease marker, put little marks, and then you cut it and splice the tape, find it, and then away you go. It was
Jim, do you remember the smell of the rubber glue?
Yes, I do, Mike. Yes. and then Johnny, I was trained on, believe it or not, in high school, I took a radio class. Right, and where we actually had a broadcast, it was 88.
Taught by Marconi, I'm pretty sure, right?
Pretty much, yeah. But the station, I think, is still around. It was 88.5. It's down in Broward County. I think they called it WPHR, which was Piper High School or whatever. But I took that class, and we broadcast live. I got kicked out of that class. Literally got kicked out because I cursed on the air accidentally. I got really comfortable when I was doing my broadcasting, so I kicked my feet up on the table while I was talking, and my chair fell out from under me, and I went, "Oh, S," and I didn't say S. I said the whole word, and then I got kicked out of the class. They kicked me out of class. So that was my broadcasting career up to that point. But
what year was that? Were you the very first shock jock?
Yeah, exactly. but back then they had the cards. Remember they called them cards, Johnny, which were like 8-track tape things, but they called them cards for some reason. Or carts. Yes. Yeah, carts. So I was using the carts with the pots. Remember they called the dials the pots. They called those pots.
Still, you're potting up. Jimmy,
yeah,
you've been potting us up all day.
What was the pot thing? I never got the pot thing.
No, I never love the pot. I really do.
It's a potentiometer or something like that. I'm pretty close to that. That's what it
Oh,
actually is. Yeah.
wow. Hey, I didn't realize that I'm sitting here BSing and I want to get into the market, but this might be a good way to get into it. There's a guy named Mike who's interested in getting some advice. He's thinking about selling his home and moving. So let's
Great.
talk to him.
Great place to call and get that advice. Even better place if you're looking for some professionals to make that move happen for you. Remember, Florida Talk Real Estate is a
He dropped
.com.
off.
Your one stop.
Sorry, guys.
What's that, buddy?
He dropped off. Yeah. The caller.
Oh, okay.
All right,
Okay, no
well,
problem. I didn't
Mike?
notice that happen. So sorry about that, Mike. If you
Mike,
want
if
to
you want to
call
call back in, you're more than welcome at 877-927-6969. Or, of course, go to floridatalkrealestate.com. You can get in touch with the team and get the advice you seek and possibly the professional help you need.
Yep. And yeah, so anyway, so we had the old stuff, Mike, the old school stuff back in the day. And
Listen, I took in my freshman year of high school, I took a typing class and it was done on typewriters. Right.
Yep.
So, and this was, let's say I graduated in 96. So 92. So definitely internet was out there, right? You could do your old AOL dial up. They had Apples, like Macintoshes were in school since I was probably in elementary school. But I took this typing class and I guess they still had all this equipment. So they're like, okay, we'll throw these guys on typewriters, guys and gals. And that's where I learned how to type. Yeah.
Yeah, and you got to throw the carriage back over and everything, or was it automatic?
Yeah, but no, they actually had the carriage return button.
Okay.
Right? So it would return it for you, but you had to hit it just like you do now.
Yeah.
You know, the old carriage return or enter.
Nice.
Did it ding?
You remember the home row key?
Yeah, it slid.
No, but did it ding? Did it ring the bell like you do with the manual where you slide it over, you go ding when you change it?
I don't remember, but I feel like it let you know when you were there. Yeah.
Mike, what's the home row keys? Left or right? What are they? Don't look down either.
ASDF, JKL, semicolon. There we go. I had to look for the semicolon.
Yeah, ASDF, JKL, semi. Yeah, baby, home row.
I took typing in high school too, but I sucked at it. And then when I became a journalist, I just learned my own way. So
I type the proper way. Yeah, I've got my hands on the home rows, and I learned. I paid attention.
Yeah, I don't peck, but I have my own way of handling it. But I could type pretty fast.
Do you have to look at the keyboard? That's the question.
No, I don't have to look at a keyboard. I rarely have to look at the keyboard when I'm doing this stuff.
Got your own system.
You kind of know where everything is.
Nice.
That's the I guess the skill you get after writing 3,000 stories, at the paper. It's like crazy. Hey, AJ just dropped in, came in from our Facebook page. AJ is our appraiser guy that we have on the show all the time. He's always fun, AJ Holman. We always have a really good time when he comes on. We have to get him on soon. He sent me an email about a week ago. Remember the last time he was on, he said he was kind of very interested in what was happening in marketing. He was doing his own studies to see what was really happening. And at that time, everybody was saying that prices were not going to drop. We were not going to have a drop in prices, and that we would still see price appreciation this year. And I was saying I didn't think so, but it looks like, at least through October, it looks like we're going to see about 10% price appreciation for year over year, right? That's the way it looks right now for most of the counties. But that trend's not going to continue, guys. As long as the interest rates are still at these levels or higher, I don't think that's going to continue, because we are seeing that we've seen about a 10% loss in home values from the peaks of this year. So we had such a high beginning. We went up 20%. By June, the values increased by 20%, and we lost about half of that, by the end of the year. So that trend's going to continue. So now Redfin came out with a report yesterday thinking that the average home in the United States is going to drop by 4% next year. They don't think that
interest rates keep going down, though. So, I mean, those things, if they're going to interest rates keep going down, we're not going to – I don't think you're going to keep seeing the trend of the values going down.
Why would they keep going down, Johnny?
I don't know the answer to that, Mike. I don't understand how or why it's happening.
Positive attitude. That's why you say
I don't
positive.
get it.
Yeah. Yeah. You don't
I think.
Oh, go ahead, Mike.
I was just going to say, I think if you want to look at two charts historical charts, just look at the Fed rate and compare it to Freddie's report. Look at it. Like, compare those two charts, and you can see when the Fed was at X percent, 30-year mortgage rates were at X percent or Y percent, right? And so that's probably as good a predictor of any of how the Fed rate impacts mortgage rates. And we know that there's not a direct tie between the two. For example, Johnny, the Fed just this week, Wednesday, came out as predicted, another 0.5 point increase in the Fed lending rate. And our mortgage rates basically held steady.
Yeah.
Right. And as a matter of fact, we've had a slight, like Jim said, it's 5 weeks now where rates have decreased. And we've known that this Fed hike is coming. Right. So, are we normal? Like, so they're not tied, right? But the trend, of course, is as the Fed lending rate has increased, mortgage rates have been increasing. When the Fed lending rate was 0, mortgage rates, were really low. And so you could just look at those two charts, and maybe that's the best way to predict what's going to happen this coming year. And so is the Fed going to reduce their rate? Any indicator that the Fed is going to drop?
Nope.
It's the opposite, right?
Yep.
Unless I'm wrong about that, Jim. Like, the Fed is, all signs indicate they're
We're
still not
at
happy with inflation.
We're at 4% to 4.25% for the Fed reserve rate. We started the year at 0. We're at 4 to 4.25. They're thinking that we're going to get into the 5s, like 5.25. So we still got a ways to go. So
Yeah,
you're right. They're planning on continuing to do the increases.
Yeah, I mean, I just wouldn't be predicting that mortgage rates are going to go down. Right? Best case scenario, they hold steady. They've even this last one, it's nice when you say week over week, hey, we had a reduction. Jim is talking about a 0.75 point reduction over the last 5 weeks. But guess what? We also had a 0.75 point increase the 5 weeks leading up to that. You know what I mean? So we're like back to Jim loves this. Like, we're so September, right?
Yeah.
Or we're so September of 2022. Like, so yes, if you have been in the market, you were kind of watching closer, like, hey, Jay, what's my rate today? What if I'm locking in today? You would have been like feeling pain, for about, this whole year, but recently feeling some pain. And now some of that pain, you got relief from that pain, but we're really kind of where we were 3 months ago.
The
right?
average, yeah, exactly. We're at where we were about 3 months ago. That's 100% right, Mike. And just to give what the mortgage rates are happening right now, this week we came out at 6.31. We were at 6.33 last week, guys. So it wasn't like a big drop or anything. But from the peak of the year, which was because we hit it twice, but the peak of the year was
7.08.
7.08. The last time we did it was November 10th, right? So from November 10th until now, about a month later, we've seen it drop, 0.75 basically. So that, in a shocking year of increasing interest rates, at least that's a little bit of good news. It's not continue to go up. So that part's good. But I don't know how long this is going to stand this way because of that inversion curve thing between the short-term and the long-term interest rates for the treasury bonds or whatever. It's inverted again, but it did that a couple of times over the last 2 years, and it didn't really affect us. But I think this time it is going to affect us. So,
one thing that I look at, Jim, when I'm looking at pricing loans is I can see, okay, what's the rate offered today, on a 30-day lock? What's it look like on a 45-day lock? What's the 60 look like? What's a 90 look like? And you can kind of use that as a tool for where the market makers think rates need to be. Because, right, when you're locking on a 90-day lock, that's a hedge against market movement. And, the lending institutions don't like losing money on that type of prediction, but they are making a prediction. So if I see a big gap, like a very costly to do a 90-day lock, they're worried that rates are going to be up in that 90-day period. And if I see that the 90-day lock isn't that different than the 60-day, maybe isn't that different than the 45-day as far as like, a pricing kind of a hedge, right? So it's just like we want to cover our bets, so we make sure we pay for it. I don't see big differences. Then that is a predictor for me that the market's probably going to, at least they're predicting that it's going to be more or less stable. And so, I can't guarantee that that's what's going to happen, but I'm seeing those longer term locks not being super expensive compared to the shorter term. So
here's my question, my buddy. I have a really good friend in Colorado, and I joke that if I just did if I had a mortgage broker license and an insurance license and a realtor license, I would never have to ever work again, because the guy sells and refis his house like 8 billion times since I've known him, right?
Did you tell him I'm licensed in Colorado?
Customer, it would be I get to live in Colorado too, which is kind of fun.
But, I'm licensed in Colorado, Jim. Did you know that?
No, you're licensed in Colorado now too?
I am, yeah.
Okay, so wait, I'm going to stop for a second before I ask this question. So now it's Florida, Georgia, Virginia, Colorado. What else?
Yes. One more.
Tennessee?
And one more in the works. You ready?
Yeah.
Maybe this is something useful. South Carolina.
Oh, that's going to be very useful. So you might be able to do Daryl.
That's what I was thinking.
Okay.
Now, that's not why I'm doing it, but I just happen to. It's the way I do it is if opportunities come across my desk and there's potential, then I'll say, okay, well, I'll go ahead and go through the trouble and the cost of getting licensed in a specific state. Now, I wasn't sure what Daryl was doing, like where they had it lined up, so I didn't inquire. But I had another opportunity come across, so I got that in the works.
That's awesome. That's awesome. So that's another state, and there's a lot of people that are moving to that state from Florida. So there'll be a lot of opportunities there. But getting back to
Colorado.
Getting back to Colorado. My buddy wanted to know when the interest rates got to the sevens, right? When we got into the sevens, he goes, why don't mortgage companies just undercut each other so they get more customers? If they see that at 7%, we see a 60% reduction in mortgage applications, right? Why doesn't one of the companies step out of the realm and do it at a cheaper price and undercut everybody else and then get all the business? And I didn't know the answer. I didn't have really the answer to that.
So I think it's about both short-term and long-term profit potential on a loan, Jim. So mortgage rates aren't going up because lenders like, oh, look, market is allowing for 7. Let's go ahead and charge 7. Mortgage rates, and there's no direct tie, but money is lent in the mortgage-backed security world, institution to institution, national government is whatever. And so the profit margins are the same when they're offering a 3% loan versus a 7% loan, because the lenders aren't like the bottom line. You know what I mean? Like their profit margin is still the same. So if they're undercutting all their competition, they're making less money. They also have an instrument that doesn't pay as the other instrument. So the mortgage-backed security, when it gets into that investment world, right? The investors want the 30-year mortgage. Traditionally is a very solid investment. It's got a guaranteed return. So why would you invest in something that's going to return,
that's what I told them,
profit versus something that's 1.5 in profit?
Right. So they're not going to want to buy your mortgage on the mortgage-backed securities. They're not going to want to buy that one because it isn't conforming with all the other ones.
And he might counter that and say, well, wait a second, but if they get enough of them, right, you make up in volume what you're losing in profit. And I'll just say there's some reason that doesn't happen that way.
Well, and also you'd have to have all the money yourself, because you're not going to be able to get the leverage of getting the money back from the mortgage-backed securities to re-lend it again.
And ultimately, it's kind of like, Fannie and Freddie are buying the conventional loans. They're buying, most of those loans, and they pay a certain premium, right, to lenders essentially. Right. So your loan is sold to Fannie Freddie. It gets packaged up in these mortgage-backed securities, and they pay a coupon essentially of, hey, this is what we're offering on a 30-year fixed rate mortgage. This is what we're going to pay you, Mr. and Mrs. Lender. And then the lender says, okay, well, we need something on top of that so that there's the profit margin for the lender.
I wanted to go back and talk about you getting the licensing in the other states and what makes the one-stop real estate shop that we've created together as a team so unique and valuable on so many different levels to people. we are working right now with a bunch of different customers. We just mentioned Daryl and Amy. They're going to be closing on their house at the end of this month. And then their plan is to move to South Carolina to be closer with relatives and buying a new home up there. Now, what we've done is that we were able to meet with them down here, figure out what they were going to be able to sell their house for and how much they would net on that, knowing their numbers, so that way they knew how much money they had in their pocket. We took that information, went over to Mike. Mike then calculated what they could afford for their new loan. And then Mike wasn't at the time licensed in South Carolina. If he was, Mike would be working as the loan officer for him, looking for the new house up there. And then what I did is, after Mike told me what the numbers were for Daryl and his budget and everything, Daryl told me where he wanted to live or the areas he wanted to live, because he wasn't sure of his exact one part of South Carolina. There were a couple parts. And then we started interviewing top agents, Keller Williams agents up there, and placed him with Tony. And now Tony is helping him look. At first, he was helping him look for rental properties. And then they changed their game plan. So now it looks like they're going to be looking for a home to buy, possibly. But either way, Daryl is being handled very well by a great Keller Williams agent that we vetted, interviewed, and found for him up there. And now he doesn't have to worry about everything, because he knows everybody in South Carolina knows what's going on in Florida and vice versa, and helping him out. We're doing that with another customer. I had a good consultation with somebody, with a nice married couple, Renee and John, and they are renting down here right now. They've owned a lot of properties, been down in Palm Beach County for a very long time, but they're renting right now. But now they want to buy like their forever home, the last home that they want to buy, but they want to do it on budget, and they know Palm Beach County is not the area to do it in. So we're looking at multiple parts of the state, and maybe even other states such as Georgia, North Carolina, South Carolina. So we sat down and had about an hour. We got them over to Mike, and Mike gave them numbers, understanding their numbers. And then I had to sit down with them, and we went over about an hour and a half. We went over all the different things, the moving parts. It's a very complicated situation for them. And my advice to them at the end of that meeting was, you guys got to get a better plan. And I'm being, honest, and I care about them. So I was like, you need a better plan. You're all over the place. You're not focused enough, and you need to get more focused, and I can help you with that. So I gave them a homework assignment of what they needed to do to get more focused, so that we could help them better get to where they want to go. It was a really great conversation. At the end of the meeting, Renee, God bless her heart, she actually started tearing up, because she said she was so happy that she met us and really understands the power of the one-stop real estate shop we've created. And she's just really, really happy that she met us, because she knows that we're going to help her get to the next chapter of her and John's life, and do it in a right way with people that care. So anybody that's thinking of moving, but they also want to they're leaving here and they're moving out of state, or if you're listening to us, on the iHeartMedia app or around the country, and you're thinking of selling your house somewhere else and then moving down here, we're the people you need to be talking to, because we're going to be able to get you about, if you're moving from out of state and you're moving down here, you got to understand homeowners insurance. And if you don't have an agent talking to you about that, because if you're from Iowa or New York or New Jersey, you're not really caring about homeowners insurance. It's not really an issue you think about much when you're buying a house. In Florida, it's one of the top three things you're talking about. Okay.
It's funny, Jim. It's worth pointing out like when it comes to real estate, buying and selling homes, you absolutely need local expertise. You have to have somebody who has their finger on the pulse of the market, that just knows the market, knows what neighborhoods, all of that stuff. And when it comes to your mortgage, you don't need that same local expertise. Like, the rules for lending are national, right? Fannie, Freddie, FHA, VA, USDA, they all set the rules. Those are the same in every single state. Now we do talk about like, oh, he's got this out-of-state lender. So you see an out-of-state lender, Jim. But we're talking about like the national lenders. And so you're like the big ones, and you you're not sure about the level of expertise of the personnel working on your loan. So it's not about, hey, they don't have local knowledge. It's like they might not have the knowledge needed to really get you a solid pre-approval in the first place. And so, as long as your loan originator knows what to look for, you just mentioned insurance, huge number. Down here in South Florida or any place Florida, if you're looking at condos, it helps to know the rules for condo lending in Florida, right? Like, and what it takes. But so I can do loans in those states with confidence because I can look up, closing costs, at title companies in those states. I know the rules for lending. So you can do your lending from somebody who just knows what they're doing. You don't have to have that local knowledge. That's why I'm able to do it.
And the other thing is like when I'm interviewing the agents in the other states, one of the questions I ask, what does a buyer need to know that isn't just, instantly recognized? Yeah, like what's common sense? And then they tell you stuff. And I bring up, like down here, insurance is a really big deal. How's your insurance stuff? And I actually had a conversation with somebody from Tennessee when I was talking about insurance with them when my customers were buying a house in Tennessee. And they were like, gosh, we don't even talk about that kind of stuff here. It isn't even thought of. You just get your insurance. It's not a big deal. Right. And then telling her about what was happening here was like eye-opening for her. But you know what that conversation generated into? Well, over here, you have to worry about this type of building construction or this thing that might be built into the house. You have to keep an eye out on that. We wouldn't have had that conversation. Most buyers wouldn't even have that conversation with their agent. But because it was peer-to-peer, professional, I was able to draw that information out, which gave my buyers more information. And to me, information is power, right? Knowledge is power to make sure that they're making the right decisions of where they're moving to.
I never heard of a wind mitigation report until I moved down to Florida.
Right, exactly. Right, exactly.
What do they have in South Carolina, Jeff?
Right, or the restrapping, like the third nail and how important that is and things like that. Or I wonder about the FPE and stab lock electrical boxes and stuff. I assume that's everywhere in the country. That's something to worry about. The aluminum wiring in the panels. Do you know, Ross, if that's like a national thing?
I have no idea. It's tough enough to keep up what's going on in Florida.
Yeah.
Figure out the other 49.
I know, exactly. Worried about everybody else. Let them worry about their own stink, right? So it's kind of funny. So I just wanted to mention that we are the one-stop real estate shop. That's what we've created here. We're working with another customers right now, Crystal and Terry. They're awesome to work with. They've been listening to us forever. They recently inherited a house because one of their relatives passed away. There's 3 tenants in there. There's building department issues. There's code enforcement fines going on. When I went over to take the listing, the tenants aren't really playing nice with the relatives. When I went over to take the listing, it was a Saturday after the show a couple weeks ago. There were 2 sheriff's deputies out there at the house when I was driving up to the driveway. And I was like, I wonder if this is the house. And I'm like, yep, this is the house. And then I had one of the sellers in the house having a verbal argument with the tenant. The other seller was in the driveway literally crying, right? The poor woman. And then you had the 2 deputies there. And I'm like, just another day in Florida Talk Real Estate. We're here to help with issues. But you know what? We're
it
giving
sounds like
them...
I went to the Popeyes when I went to Popeyes yesterday. So almost all of that same stuff was happening, but for different reasons.
At Popeyes? Which Popeyes?
Yeah. Military in Okeechobee.
Oh, I know that one. I was wondering if you
listen, I love Popeyes. I go there. It's twice now I've been in that one, and there's been some drama happening.
That you must have a Rauch thing about Popeyes, man. It's funny because I know other people that like Popeyes a lot too. But we've been able to coach them of the questions they need to ask the building department and code enforcement, their eviction attorney, the attorney they hired for the eviction. We've already, through the law office of Paola Krasker, given us advice on what to do about and Trident Title about what to do to make sure that the probate stuff was done correctly, that we can sell the house when it's time to sell the house. And we have all of those tools, the title company, the lawyers, the realtors, the insurance companies. the mortgage people. We have it all here for you. We're working with another customer right now. I'm going to finish up at a listing in Singer Island, a really nice condo we're going to be putting on the market. And the couple are Canadian citizens. So we have to deal with, they're selling a unit. So when you're selling the unit, you have to deal with what's called the Foreign Investors Property Tax Act, which is FIRPTA. And that's a very big deal, because when you sell a house, if you're a foreign national and you're selling a house in the United States, you have to pay the income taxes immediately at the closing to the IRS. And they don't know the exact amount that you're going to have to pay. So they have a certain set amount that the title company by law has to take out of the proceeds at the closing. And usually it's way more than what you really have to pay to the IRS. So thank God that we have the law office of Paul A. Krasker. They have a whole, and Trident Title. They have a whole system for people to deal with the FIRPTA issue. And they have a company that they turn to make sure that we get a real estimate of what real taxes are going to be paid on the sale, so that they're only taking out what needs to be taken out at closing. Because the big problem is for foreign nationals is if they take out too much money and give it to Uncle Sam, trying to get the money back later is not fun.
I bet.
So, they demand that you have to give it to them, but then when you overpay, it's very hard to get the money back. So it's much better to deal with that all up front. We have the facilities and the assets to make that happen. And that's why we're the ones real estate shop. So when you're thinking real estate, anything dealing with real estate, just think of us. You don't know how many people go, they don't even really know our names that well. They don't know what companies we work for. They just know we're the real estate radio guys, right? Call those guys from the radio show. They'll help you. And we'll help you get the answers that you need. Even if we don't end up working with you, we're going to get you that information, because that's what we do. I'm sorry, that was
FloridaTalkRealEstate.com. No, that's a beautiful thing. FloridaTalkRealEstate.com. I'm always going to tell you, know it, use it, love it, share it. It's the one-stop real estate shop. And just by putting it out there, you never know who you're going to be absolutely helping out. It's FloridaTalkRealEstate.com.
So I'm going to ask you guys something, and then I want other people to respond either on Facebook or YouTube, because I'd really like to have a mini survey on this. Over this year, I've had a couple of people, two businessmen that don't know each other, that came to me and said, we'd like you to leave Keller Williams and open up your own real estate brokerage. And I'm not really interested in doing that, but I am very respectful of the people that came to me to open up the new brokerage. And the funny part is the guys don't know each other, but they both told me the same thing as to growing the business throughout the rest, through future. And they said, you really gotta do a couple of things about your personal stuff, like the way you dress and the things that you wear and things like that. I don't want to get into that too much right now. We might talk about that on another day. But both of them said the same three things that they wanted me to do. And one of the things was they wanted me to get a new car. Okay. So I've got a 2022 Acura TLX, right? And it's an A spec. So it's the sporty one with the nice interior and everything. It's a little sportier. It's basically almost the same car Mike has. It's just a different brand. You got the Toyota, right? If I'm not mistaken, Mike. Or is it the Honda? You got the Honda.
Yeah, I don't think anybody's going to mistake an Acura TLX for my Honda Accord.
I don't know. They're the same model, basically. It's just one's a little sportier than the other. But
yeah. All right, but you have a new car, so they want you to get a different car.
Yeah, so they're telling me that I should be having a car, that's six figures.
Yeah, when I watch $1 million listing, Jim, those guys either have those cars, supercars, and some of them even have drivers. So I think
that I would do. That I would do. I would rather have a Ford Bronco, 1997 Ford Bronco, and have a driver. Than have the fancy car, right? I just can't afford the driver right now. But
how much of that is production where they're, all right, we need to rent this car for the day?
No, but which one is the chicken or the egg, Ross?
I'm saying for those $1 million listings.
Oh, well, I think that's their cars.
To be honest with you, Ross, that's a good thing. So I like driving my very affordable but nice car, and it's affordable. And I'm not really into cars anyway, right? I don't like get a lot of I remember we were out for the Super Bowl thing, and we were with all these rapper people and everything. So we had to go get like a couple Maseratis. And let me tell you, that Maserati, the interior was no better than my Acura A-Spec. No way. I felt like my interior was better than their interior. And I felt it was like cheap. And I'm like, you're spending all this money just because you want to see somebody say you're driving a Maserati,
Jim, I'm not sure if you've learned this lesson yet, but the brand name is what is important. But the quality does not matter. It's the brand name.
Well, the thing is that my opinion is I'd rather hire somebody that is good at their job and is reputable and honest than worrying about whether they have the right car or not. Now, I understand with buyers, if the buyer's driving the customers, then I think the car really does matter, but I have a policy that I don't drive my buyers in my car because of insurance purposes and things like that. I prefer that they follow. With very rare exceptions, when the big celebrities come into town, I'm doing exactly what Ross says. I go rent like a super fast sports car, super, large luxury car. I'll rent it out for the day when I'm going to go show them properties and stuff, because that's what they enjoy, and it's more for them than for me. It isn't about my status. I'm sorry?
Do you tell them it's a rental, or you pretend it's yours?
To be honest with you, I don't tell them one way or the other. But if they ask, I would tell them it's a rental. I'm like, hey, I'm trying to handle you right. I want you to enjoy the day.
I guess what these business guys are telling you, Jim, is that it's the equivalent of you have to dress for success, right? So it's kind of like that, which I can see the merit in that when you're trying to portray a level of success, right? You want to be portrayed as successful so that the buyers immediately trust you, right? That you're successful.
Yeah, but so if you're wearing I don't know. I obviously don't know anything about suits. I don't like that. But if you're wearing,
unless it has the word swim in front of it.
Good one, Mike. I like that. That's a good one.
If you're wearing an Armani suit, I don't know, whatever that you got off the rack, I wouldn't notice whether you were wearing that off the rack or if you had some custom fine Italian suit that cost $5,000.
Me either.
I'm just like, oh, that dude's wearing a suit. He's professional. That guy's driving a nice car. He's professional,
If I'm picking up Ross to go look at houses, I'm coming in with my open top 2-door Bronco, right? That's on 35s or whatever.
There you go. Ross, I'm kind of the same way. I'm like really clueless to that stuff. I don't really keep an eye on like what people are wearing. Like, they recommended I wear an expensive watch. I hate watches. I will not wear a watch, right? And they're like, well, it's just a status symbol thing. You got to have the watch. And I'm like, well, if people are not going to hire me because I don't have a watch, I'm okay with that. That's my attitude. Because to me, that sounds like
it's not who you are.
High maintenance customer. It's a high maintenance customer that I was like, if they're going to be like that about a watch, how are they going to be during the process of the deal?
I think
what Ross just opportunity to remind everybody that Greek and Joe and Jimothy are going to take the locker room over, because you're talking about Greek right now. The locker room is going to be coming up here at 11.
I think Ross just said something very important. And if it's not who you are, it's not genuine. And so I think being genuine is much more important than portraying something that's not genuine. But maybe you have to do that stuff in order for it to become who you are.
Yeah, so I started reading articles about it to see what other people thought. Does the car really matter? And here's the thing. This is what I found out is that there's two ways to look at it. Some people actually, if you have the fancier car, they actually don't want to work with you because they automatically think that you charge too much money. So they don't want it. Or they can think that you make too much money. Like if you're driving that car, you're getting paid too much. So there could be negatives of having the good car. Some of the positives have the good car. Some people think, like Ross thinks, hey, he must be successful. He's driving nice wheels. He must know what he's doing and making enough money where he could afford that car. And then you have, of course, the buyers, who actually will complain, like if the car is nasty. You know what I mean?
Sure,
If it's like
sure.
dirty and there's like cans in the back seat or stuff there, you're trying to get them in the car and you're moving stuff off your seats,
Now,
to get
what
them
if,
into the car and stuff.
Jim, what if you're trying to break into a specific market, right? Like we've talked about luxury sales and price points. Like I think you have to consider that as well, right? If you're trying to go out for a listing that's a multi-million-dollar home, you probably should be.
One of the business guys actually said, if you pull up to my $5 million listing and you drive up with that car that you're driving right now, before you even, I'm going to see you in my Ring camera as you're pulling up. And I've already decided I'm not hiring you.
What a dude.
See,
Well,
but
then you ask him why he's cheaping out on a Ring system.
And I'm wondering, I know that is the perception that a lot of realtors have, is that exact attitude that guy told me. But I wonder if it's really true or not. Because, to me, it's like if somebody sat down and talked to me, they're going to know that I know what I'm doing and that I have a plan on how to sell their house. And does it really matter based on my stats?
Well, for people that are shallow and are going to base all their assessments on your material items, it does matter. For people that understand that I need to hire the best person possible, probably not going to matter.
Yeah.
But there's a lot of super materialistic people out there that status means everything. More than any stats you can show them about how good you are at what you do, what you pull up in and what you're wearing means more to them than what you can do for them.
Yeah,
I think it comes down to know your customer, Jim. So just know your customer.
Well, I'm definitely not going to be like when I go to multi-million-dollar listings, I drive my car. I get the listing, I don't get the listing. That's what's going to happen. My attitude is that I just would like to know how other people feel about that. I know that I've actually had a couple customers comment on the car I have now as being super. It's like, oh, wow, look at what you drive, that kind of thing. And even that makes me uncomfortable because, like I said, I'm not really into that kind of stuff. I'd rather spend my money more on lifestyle stuff like experiences than on things.
Absolutely.
You know what I mean? So I'd rather have the less expensive car and take an extra vacation a year and go someplace.
Well, I like what you're doing with your hair, Jim. Where you put in a little bit of dark on the top and leave the gray on the sides. Like that's
natural, Mike. That's natural. You're just jealous that I have something to have gray on the sides.
I don't have any grays.
Mike's got the sides covered.
Yeah, he does have the sides covered.
My back is very full.
But I'd really like to hear what people think about that. About does the car really matter? Like if somebody's pulling up.
I think as long as it's not smoking when you're pulling up and the quarter panel is a different color than the rest of the car and the headlights are all there, I think, as long as you got something that's nice and clean, that's what I think.
No, but if you got that car, Ross, but you got a beast under the hood, you got a sleeper, you could get away with it. You're like, yeah, let's go race.
Yeah, but it's smoking coming in and it's and you had to, sorry I was late. I had to have somebody come, I don't know.
Oh my God.
The car and get there and
be
reliable and clean.
I lived that life when we started the show in 2012, all the way until 2014. I was driving this. It was funny. I said 1997 Ford Explorer. I had a 1997 4Runner and it had head gaskets that were shot. And I remember one time, the car it was smoking like crazy and I couldn't afford it. At that point, I was broke, right? I'm being honest. And I couldn't afford to get a new car. And I remember one time, Johnny, that we were live up in the Port St. Lucie studio and my car died at that appliance store right around the corner from the station. Remember the appliance store over there, Rosner's or something?
Yeah.
And my car died there. I couldn't drive it. It froze. And I jumped out of the car and I ran to the station. I ran to the station, did the show. And then I couldn't even afford a tow company to bring me back. I actually drove the car all the way down to Delray from Port St. Lucie going like 15 miles an hour with my foot to the floor. It was so crazy.
You made a bunch of fans that day for sure.
Hey, I picked up 51 listings that year.
We are officially out of time on a Saturday. Great to have you with us. Always remember, Florida Talk Real Estate is your one-stop real estate shop. It's floridatalkrealestate.com. You'll find the hotline there, 888-973-7828. You can call it 24 hours a day, 7 days a week. Answered by a live body. It's floridatalkrealestate.com. Mike Rauch, the mortgage guy from the mortgage firm. Have a great weekend.
Well, thanks everybody. And if we don't see, I'm not sure what's happening next Saturday, but if we don't see anybody, Merry Christmas, Happy Holidays, Happy New Year, all that good stuff.
I know we are planning on being live next Saturday. I don't know if you're going to be with us or not, Mike. If not, Merry Christmas to you and yours for sure. Ross Komarinetz, Brightway Insurance, Juno Beach. Always good to see you, my friend.
Good to see everybody. If I don't see all of you, which I think we will, but to everybody else, Happy Holidays, Merry Christmas, and let's have a great 2023.
Beautiful thing. And Jimmy D, Jim DePolo with the Florida Home Pros team, Keller Williams Innovations. Have a great weekend, my friend.
Thank you, Johnny. Everybody have an awesome weekend. Stay dry.
Yes, indeed. Jimothy's going to stick around. Joe and Greg is going to join them. The locker room is next. We'll be back next Saturday. 2 hours of infotainment. Florida Talk Real Estate. It's every Saturday. Thanks for being with us right here. It's Real Radio.